Okay, good evening, everyone. It says you are live, so I'll wait for people to filter in. I think next week we might use Zoom for these calls. I'd like to use Discord, but till I can figure out how to record it, make it available for people to watch, and until then, we're gonna it'll be a work in progress. And I know there's some housekeeping things that people have. We can get to that sort of toward the end of our time together. One thing that I want to say is those of you that have the trading view indicator from before, that still works. That's fine. Um, there's a new one that's invite only that I need your trading view IDs. I'll get that done tonight. Certainly before we open tomorrow, before you get the trading view string. So if you have the one that the horizontal string that I've been producing for all these months, whatever works in, that'll still work. If you have the one that requires sort of the vertical string, that one is not what I'm going. There might be also a version of that string coming out, but that's not going to be the main thing. I'm not going to be doing that one. Okay, so let me get started. I see David's here. Good. I'm not sure who else is here, but me and David got this. Let me pull up my little notes. Okay. All right. So I'm going to start off just with a little market rappy kind of thing, and then we'll see if there's questions or a topic that we want to discover or want to cover. Hey, how are you? Okay, we got some people filtering in. Not sure who else is on there, but here we go. Hey, Jerry. Okay, the folks are coming. Let me just make sure I have everything up. There we go. What's up, Doc? Listen to him. Let me just, okay. All right, so here we are, as you can see, we're right at 6,300. And no surprise, that's going to be a sticky area when you see it, when we look at the chart. Quick review of last week. Basically, most of the week before we kind of finally broke out, and if I kind of, oh, I forgot to screen up to, okay, let me make sure that everybody can see the screen. Give me 1 second. Let me just get this prepared. Yep, coming right up. Screen share. Okay, here it is. Entire screen. Here we go. Okay, take two. So here we are, and that's Mentor Q's product I have here. I guess put the roadmap feature on so you can kind of see where the zones are. Then we'll look more granularly to see what's positive and negative gamma and what kind of reaction we might see at those zones. So like I said, we're at 6,300. Again, sticky area, lots of market maker long gamma around here, so we can expect to stick in this area, all things being equal, short term. Over most of last week, we kind of chopped in the 35-ish area, kept showing up for all week. with a few undercuts and reclaims, and like that 65 area, 70, we kind of kept trying to get over it and pull back to it. 50 was the other inflection point, give or take 5 points. So now we've kind of broken out of that short term. So now, and we'll look at the expected move in a minute. Now we're kind of can expect that same 65 area that was where we kind of kept bumping our heads up on the way up is kind of like our first immediate downside. Not immediate, but a, a half decent down day. That's what 0.5%, which is kind of what we're doing. Um, Realized volatility has been like, what was it? I think 9%, and so realized vol of 9 is roughly what, about 0.6%. Like I said, how do you get that? Just think of VIX. VIX 16 is 1%. So 8 is half of 1%. Is a half a percent move a day. So 9 is a little more. So I'll call it 0.6% move in a day. 0.6 times this is 36 points ish. 30, 35 points. Which, if we happen to look here by coincidence, okay, so actually vol is even less. So realized vol has been around 9, but we're coming in with a 6 vol into today. See that? Hopefully you can see IV6, IV 6.7. Now, typically the Monday vol is always mispriced on Fridays. This will probably come up. This will probably come up. Okay, so let's get, so with that said, let's take a look at what's going on here. Okay, so this is the view of everything. Now, this is right now set to gamma, not position size, just so we can see what the immediate reaction is going to be. And as you see, 95, 6,300 sticky. So expect action in this area. If we're under it, going to be a grind through. If we're over it, we go to the void, 10, 15, 10 area, stall right here by 15, 20. So remember, market makers, when they're long, they get too long as we head up, and so they sell into this zone. As we go down, then they are now too short, and they have to buy, so you get this sticky stuff. The reverse happens on the bottom. That's the mean reverting thing. As we go down, they have to buy. As we move away, they have to sell again. So when you have a clear area like this, that is a nice potential for just kind of a choppy grind. However, if I just switch this to position size for a second, these positions aren't very huge. And I think I said in my note, or if not, I will. I haven't officially put my note out yet. It's kind of written. I put it in the Discord, I think, like a preamble version, that overall market maker gamma exposure is lighter than it was on Friday or last week. Obviously, we had this big options expiration, so a bunch of options expired, so that's a lot less gamma. So the hedging response, while still there, is going to be not quite as clean as it was last week, even the week before. Levels might be overcome a little more easily. As you can see, bars that look kind of big in the gamma view are not quite as big here. Well, 1,600 calls, that matters. So it's going to be hard to get over 20, over 6320. Um, Down here, 1,000 puts. Yeah. So this area, so again, this area should hold if this breaks 95. Got this little pivot at 85, but there's not much there. And see, if this 80 breaks, there's really nothing to stop us until 60. And like I said, that 60, 65 area has been an area of interest for a while. Okay. And again, going back to last week for a second, we had that flush on the Fire Powell day all the way down to 6,200 when we reversed. Now, a lot of things contributed to that, but I just want to talk about the IV part, the vol part for a minute. Here's what happened. VIX, we're just going to use VIX. We're not going to look at fixed strike vol or 1 day vol. We're just going to look at VIX, it's close enough. Once VIX spiked, as VIX was spiking, we were dropping. The strength of the positive gamma nodes lessens dramatically with IV spikes. We're just going to keep it, we're not going to go into the math or what happens. Just know that that happens. Simultaneously, the strength of the negative gamma nodes increases. So the buffering effect of the positive gamma decreases while the magnetic effect of the negative gamma increases. So we don't want to see that. And you see, as IV started to turn around, news came out, whatever, we got that V bounce that one would have expected. And 6,200, I think, would have held pretty much regardless. Okay. Also, on Thursday, I think it was, Waller came out, Fed Governor Waller, and did his speech with the paper along with it, like the text of it. 3 reasons why he thinks the Fed should cut rates. And whatever they were, unemployment, inflation is under control. It's a one-time tariff thing. It's not going to be ongoing increases, et cetera, et cetera. So the question is, and I kind of say it, I don't know if it's fair to say it, there wasn't really a demand-led rally so much as a mechanical rally. And what do I mean by a mechanical rally? My weekly range is the same as last week. It's pretty similar. I'll put that up in a second, Selena. How do I do this? I have to go back to here. Show comments on stage. Okay. If I do that, it's not letting me do it. Okay. I guess only the YouTube comments can show on stage. Okay. Mechanical rally, that's one aspect of it. Other mechanical rally is the market maker hedging. Did you notice how we just kind of almost every day was just a pin, usually a pin to the top, once in a while a pin to the bottom, but every day was a pin. By 2 o'clock, the mechanics were set. That's one part of it. Mechanical, and that was market maker hedging around these big strikes, these big round numbers and these big strikes. Mechanical. Other part of mechanical, and we'll call it systematic, maybe not mechanical and non-discretionary. It was, we have hedge funds that I mentioned in my end of June note, and a lot of people mentioned it. CTA and vol control funds going into July had 115 billion to buy per gurus. Per gurus, there's still 50-ish billion to buy, give or take. Um, there's CTAs, commodity trade advisor funds, which basically are trend following. They buy futures in E-mini, futures in gold, futures in whatever, and they're trend following. Whatever their algo is, everyone's algo might be a little different, but the trend is up, so they're buying. So we have all that stuff kicking in, mechanical buying. And again, and it's in my note, it was actually in my weekend note as well, the Saturday note, that Morgan Stanley and Goldman have different spins or looking at different parts of the elephant, but they're both saying that there's still buying coming up. So although we want to say we're overboard, although we want to say but inflation, although we want to say but interest rates, although we want to say but tariffs, that's still there. Yeah, sticky. It got sticky. Yeah. So, and Valsig's put out a tweet, and again, this should be obvious. Don't let your bias about what the market should or shouldn't be do, overvalued, undervalued, inflation, relative PE ratio, that may be right a month down the road, 6 months down the road, 3 months down the road, but it don't mean squat on zero DTE. That's not going to be what makes us go up or down on Monday. Now, what might make us go up and down on Monday may be if rates spike and the cross algo, cross asset algos sell E-mini and buy, or sell this and buy that. That might do it. So in a spillover way, that will cause it. But otherwise, that stuff's not going to cause it. And I put in my note over the weekend the 4 factors that kind of contribute to market movement: PE ratio or valuation, whatever you want to think about it. That's the long-term weighing machine effect. But news like that matters. Oh, NVIDIA had good news. Their earnings are going to be good. People bought NVIDIA, bought the semis, and up we went. Number 2 is TA. Does TA matter? Yeah, kind of, sort of course. We all know that there's levels that buyers come in, whether it's moving averages, whether it's pivots, whether it's, we'll just use moving average, pivots, overbought, oversold on a short-term basis. There are areas where people might tend to come in. That's part of the story. Part of the story that we look at is market makers force hedging response. Why do we look at that? Because that's an incremental buyer. There's going to be buyers, sellers on both sides of the tape for different reasons, and we can't predict that, or I can't, as reliably as I can predict if we get here, market makers are going to buy and sell, or sell. That's an incremental buyer that's going to turn the tape. I forget how many billions are transacted a day. I looked it up a few different times, but it's those few billion buyer or seller at the margin that's going to make the day go one way or another. The market maker is going to account for a chunk of that. Okay. Now, I mentioned that the historic volatility, the realized volatility has been 9%. When the 20-day gets to about 8%, that's considered overbought or vol too low, like we had in. Now that's not VIX, that's realized volatility, and you could put it on your chart: historic volatility or realized volatility. I think I probably have it on this one. Yeah, right here. Implied volatility and historic volatility. This is a 10-day. They're off the can kind of things. So let me make it 10, 20-day historic, since that's what the guru McMillan wants to use. So I'll defer to him. Doesn't change much. And you can see historic volatility. Oh, this is a percent scale, not an absolute value scale. So you see it's way down here. But implied volatility, no matter how cheap it is still at a reasonable premium to historic volatility. Okay, so who was it? I think it was Selena was asking about the expected move, and here was the expected move from last week, 6170 ish to 6350 ish. This week, it's moved up. Now 6200, again, that held last week at the bottom, also is kind of the bottom of the range, and the top has blown up all the way up to 6390, 6400 ish, we'll call it. Does that mean we get to either of them? No way to know, but this is a move that's priced in. And if you notice, if we just kind of zoom out, along with the market, the straddle prices have been kind of chopping along, same top here for 3 weeks, bottom kind of expand a little bit here as some negative news creeped in. Then we kind of went through the top of the expected move, and then we got a new range. Then we kind of chopped in this range. Now we got kind of a new range. So the options market is kind of following along with the range. Now that doesn't mean that we don't end up over here like we did wherever, and then the range, the bottom of the range, drops down a little bit to wherever, back down to here. The following week, I don't know, but this is what seems to be what's going on for now. Range bound to August 1st. That's my call too. That's my call too. And I have in my notes, and I think I put it in there, 0DTE roadmap, yeah, range bound, yeah. Breakout, breakdown most likely won't come till August 31st, or we have to August 1st or July 30th, we have the FOMC. So, plus we have end of month options volumes tend to be a little heavier than like midweek kind of stuff. So end of month is more meaningful than, whatever, like a random fourth week in the cycle otherwise. So the expected move until FO. Now this is interesting. Let's take a look at this. Let me make sure I got my numbers right. The expected move until the FOMC right here is 99. 100 points. We're at 6,300 now. The expected move is 6,300. The straddle price till Friday puts us up in that same area. But when I was just eyeballing this, the end of month, and just a lot of times that's just because it's more options heavy, suddenly we move up a little more. But then August 1st, tariff day, now we're in the 14 zone, 124, which puts us 124, 125, which puts us where? 125 puts us up almost near 6,400 and change, teasing 6,450, 125-ish puts us down at that 6170 level, wherever it is. I have the numbers marked in. So that's what's expected until then. Now, the other thing that's going on, along with those flows that are coming in, corporate buyback money is going to be slowing down. So you have those two different forces coming in. Now, in my notes, and it should be in, I think it's in the Discord. I kind of did a very rough back of the envelope. And let's get back to options depth for a second. Here it is. So you see this? We got positive gamma up here, negative gamma. We got longs all the way up here at 6,500. People have been rolling up. 6,450. People have been rolling up. They rolled up to 62s, to 63s, whatever. We have positive gamma right above us at 6340. If we break that 25, 40 comes in play. And so, and you'll get this in a note. I'm just going to go through it real quick. So if we look at it through the late July, early August, and let's just go over here for a second. Late July into early August, top of the range is maybe here, this 6,450 where we have the white, and we can get pulled all the way up further. Doubtful, but we could. We got the stall here at 6,400 where we would expect it. We have the 6320 magnet zone, kind of where we're at now. And I map out the different zones. So upside zones coming up to next week. This will come, you'll be getting this on a piece of paper so you don't have to write it down, although you could, or mark your charts if you feel like it. Overhead, 6310, 15, where I just showed you, minor stall, 6320. 6320, what was 6320? Over here. Let's go to this one. Now this is breakdown by strike. This is, I have till the end of August on this. So I was partially looking at this. So 6320, we have this zone here. So over 6320, we kind of have this path upwards. We have to grind through this. 63, then once we get over 50, if we get there, we got this big stall feature over here. So mean reverting. So we kind of have 6310 to 6350-ish, kind of regular charm decay flow from this losing value and pull up to here if we get over there. We have this big magnet here at 6,400 going out in time. We have this big crazy magnet. This is the red line you saw all the way at the top. So extreme ranges, well, 6,400 and even up here, extreme ranges to the bottom. So at the bottom we got, if we lose this area here, so we got this 6305, 6260 negative gamma, and last week we saw how the bouncing between those ranges also works with the positives in between it. So we have this as kind of like an immediate chop area, 10 to 60, and should this get lost, 50 round number, you know, we kind of have this slide down to 6,200, no shock. You know, we have the long gamma here, kind of supportive all the way down to the bottom to 6130. So this would be a slow grind down, whatever. And then, so we have the big extremes at 6075-ish, and the bigger extreme at 6,000, big extreme at 6475 or 6400. So those are kind of the broad landmarks. And again, like I said, I have it'll be coming out in a note. And I have a long version of the note and a short version of the note. The short version of the note, I think I put in the Discord already. Let me check real quick. Where is it? Did I put this one in today? No, I didn't put it in yet. I thought I did. No, I didn't. Did I put it here? Yeah, I put it here because I hadn't had a chance to double check it. So I'm going to put it in the SPX game plan channel. You can look at it. You'll get it something in the email too. But understand I didn't check it for accuracy. I might have typed the number wrong, or if I was dictating to ChatGPT, something might have come out wrong. ChatGPT is my word processor. If you guys saw the way I typed, you'd understand. But I don't rely on it for logic or for figuring anything out. I figured it out myself. I might rely on it to say put the numbers in order because I might kind of be typing them in randomly, but that's about it. So sometimes that might be wrong, the order. Okay, so we have that here so you can get in there and look at it. I know I'm covering a lot of ground here. As the wolf says in Pulp Fiction, I talk fast because I think fast. Hopefully you guys will see. So now that you saw this is what I use for my till tariff day map. Real extreme, extreme-ish, 6,400, but not crazy. It's 100 points. On the downside, the 75 area, there was a bomb of the straddle last week, till August further should hold, 6130, whatever. So, I'm still looking for my iron condos here. I'm not crazy worried. With earnings this week specifically, some Mag 7, will that have an impact on Delta? So, short version of the answer is a little bit, but not a lot. So, depending how mag of a 7 it is, if it's Apple, if it's NVIDIA, if it's Microsoft, yeah. Now, to get a little bit in the weeds on that, good question, but not too much in the weeds, there's what's called the dispersion trade. Now, what the dispersion trade is hedge funds, algos, computer programs, whatever it is, what they do somehow or other is they sell index vol. So they sell, let's just pretend, iron condors or strangles or straddles or iron butterflies or calendars, however they sell SPX volatility, and use that same money to buy in whatever proportion individual name volatility. So just to oversimplify it, sell SPX 6300, call and put, sell the volatility for next Friday, and with that money buy Google strangles and whoever else is reporting next week strangles, saying that the expected move of that is going to be less than that. So that tends to compress how the index is going to move relative to those big names. However, those big names have a weight in the index, and so that'll influence how the market moves. Does that kind of answer your question? Now, there's a real money buying effect of a stock that has whatever percent weight in the index. If that goes down, that's going to cause the index to go down, and that's going to affect the delta directly. If the index goes down X number of points, then what was a 35 delta put could become a 25 delta put. So it'll affect it that way, but not quite directly. Good. Another thing, and this is a nuance that I notice and talk about to whoever listens to me whenever I have the microphone and different, when I used to do mental cue daily plan thing. And let's talk about Google as an example. Google is reporting this week, if my memory serves me well. Is that correct? Let me double check while that's loading. Let's just take a look here. Yes, okay, good. So I don't have to waste time. So let's look at Google. And I'm just going to use this as an example. And we'll look here at just the Friday one. And then it's always good to throw in the monthly because there's always a lot of action there. But let's look at the Friday one now for the sake of this discussion. And let's look at what the expected move for Google earnings is. This is a little trick. So the expected move for Google earnings is 10 points, 9.8, whatever, let's call it 10 points. All right. Armed with that information, and Google is where? 185. So 10 points is 195. Okay. Now notice, no coincidence, that COTMC, which is the gamma edge secret sauce for where the calls go in the money. I forgot what COT stands for. COTMC go, here's where the calls go in the money, here's where the puts go in the money. However, they map that out with whatever their back end stuff. They're good numbers, guys. So what tends to happen is if the stock shoots up past the expected move, and market makers have to hedge this. Now, what usually happens if it goes up a little bit past it, the volatility crush takes care of the hedging, and you kind of stall there and you get normal breakout action. However, should we get just a little bit more of a move like up toward here, and you have all these out-of-the-money calls, suddenly market makers have to chase, and you get that crazy irrational action that I'm sure we've all seen. A company beats its earnings, like Snowflake does this a lot. Company beats its earnings, and then let's just say the expected move was 15, and it runs 30, 40, 50 points in a week or 2 weeks. What happens? Once these things go in the money, then market makers have to chase and start buying. And then you get these moves that don't make sense, and suddenly Friday comes, whether it's the weekly or the Monday options expiration. We saw it with Zscaler a couple weeks ago, last time they reported earnings. And then suddenly options expire, and then they pull back. A lot of that's mechanical. So I'm saying that to say this: should Google have a big quarter and break out, well, then that could cause a squeeze in Google, sending us up. On the other hand, you see Google is call heavy. Trust your eyes are a good filter. You see a lot of green, not a lot of red. So if this breaks, we could have a move down toward the 70, 67 and a half area, which could have the effect on the deltas the other way. But the stronger effect would be on the upside. So that's just one example of trying to answer that relatively multifaceted question. Oh, Tesla this week. Tesla. What could possibly happen there, right? What can we expect? A 1 or 2 point move? Tesla. I knew there was someone that mattered. Okay, so now Tesla, we just got this crazy stuff right here at 63.50. We could see we have 150,000 call OI roughly here. Not a lot of puts. I mean, down here at 6,300 at 300, so we're right in the middle of the range. Now, of course, we don't know what's bought or sold with this. Convex value kind of gives you that idea, and I'll ask my buddy Yamko what he sees on convex value. I have it myself. It's just cumbersome to use. There's a lot of typing, and I don't like the interface. The interface is cumbersome. If anybody likes the interface, we could talk about it. So invert. Okay, so that 6350 is probably like out in January or something. Not 6350, at 350. Where is that? Is that in the? No, it's not in the August. Oh, we have some 400s all the way up here. Obviously sold. I'm pretty sure. I would think for September. 400s again. 400s again. So it looks like they're selling the 400s. 400s across the chain. January. So I don't even know where those 6350s came in. But they're there somewhere. I mean, those 350s, I keep saying 6350. Well, here's the 350s right here, but only 11,000 of them. So Tesla. So if Tesla, what's the expected move on Tesla? Expected move 37 points. So this has got a lot of room to run before we get squeezy. But if we get to the 50 on top, we could get squeezy because of because of this. If we can break through here, not a lot to stop it in the whole complex. We could get squeezy, especially if we run through that. On the downside, if we break down here, it doesn't look like there's a lot to stop us. 300, 80, something like that. You know, there's really not a lot to stop it to the downside. I need to look at more stuff to get more nuanced view. But that's sort of the back of the envelope. So between Tesla and Google, there's enough firepower here. Let's just say, especially if one of them has more than an expected move up or down. If it has an expected move up or down, yeah, it'll influence the index a little bit. Maybe you'll have an up day, 0.7% or 0.8% when you might have had 0.5 otherwise, or vice versa. It'll give you 0.2 or 0.3 one way or the other. But if it breaks the expected move, then we could see SPX break the expected move as well. In SPX, let's take a look. Here they have a nice easy way that I can just see raw. Holy crumb! Yes, but there's almost a quarter of a million up there. Let's see where they are. Because we know that the 6400s, well, some of us know, somebody did a really good trade, and it wasn't me. Um, they sold the 6300 calls for Friday, and with that money, I actually think they paid a slight debit, bought the 6400 calls for this coming Friday. Kind of a free trade. And invert, let's see if we can find them, if they're still there. I think they're still there. See those guys? A bunch of them were bought by the same clever people that sold the 6300s. They sold 6300 on Friday, bought 6400. I think it was $1.85 for that trade. So now they're long these 6400s. They paid $1.85 for them. And what are they priced at now? Let's take a look. SPX Friday. The 6400s are 360. So they could close that whole thing out and call it a day. However many 10,000 they made, whatever, but they're clearly not going to do it. And so now he sees the 40,000. Let's see where the 40,000 are. Let's go back to the. Okay, let's walk through the days. 6,500. Well, they're not going to be here. $6,500 not up here. 6,400. We have the big one for Friday. That's the one I guess we just talked about. I don't expect much on a random Monday, day before FOMC. 6250 support, but numbers are meaningless. Look at this. FOMC day, total 32,000 options on the whole planet Earth. That's nothing. That's nothing. A normal day might be 150. That's normal, a little light. 300, that's solid. 200, 250, that's solid. Total OI. Look at this. FOMC day, 29,000 contracts. Nothing. Nobody's even playing yet. 31st, end of month. Well, we know we have the JP Morgan collar down at 58.80. All the way down here somewhere. There they are. There's a JP Morgan collar down there. So since we know it's a JP Morgan collar, we know we have it as negative delta because we know it's sold calls. But that's all the way down there. But I had more than one sold puts down below this once we got up here because we ain't going there. We ain't going to 58.80. I'm going to look to see if I can sell something down below here for maybe a day before. It'll have to be a Cossack or down here. Still trying to find those 6,500s in size. I'd say one thing I like about Gamma Edge, while I don't know exactly what's long or what's short, I like the way I can just walk through until options death came out. This was pretty much my go-to. I could pretty much just walk through the chain and see what I'm looking for. And then you just kind of have to use your own experience and judgment. So obviously it's probably going to be here. There they are. Okay, the monthlies. And they probably didn't update their OI. So the monthlies, we have 6,500. And we can take a quick look over here. That's not hard either. Now that we know where the bodies are buried, let's see what kind of bodies they are. Whoops, shit. Oops. Didn't mean to do that. Let's just go to this one, the easy one. Let's take a look real quick. Actually, we can do it this way. It'd be easier. And one day I need to give you guys a tour of options depth. I know somebody asked me, and Elias, the founder, or let's just say front man, uh, will be doing something with us. Let's see where the 6500s are and if they're long or short. Oh, I didn't even. All right, we can see we got to go wider. We got to go 60. Who knows what we're going to have to go eventually? 65. Let's just go 55 on top for fun. And since we're trying to look for a longer time frame, let's go 50. Let's go 57. 57.95 on the bottom. Not that we're getting there. 57. 57.95. Okay. So let's see, though. So we know that we have those calls there that Joel found for us. Thanks, Joel. Okay, these are market makers short. These are long. And here we have, oh, look at that. I didn't see that on Gamma Edge, but we sure as F see it here. We have 39,000 customer long calls here on FOMC day. Now they could be against something else, but you know, it's kind of a big number. Might not have a lot of gamma yet, but keep your eye on 40,000 calls at 65 and another 20,000 here at 65 in the monthly, another 4,000 over here. So there's longs up at 6,500 out in time. There's longs up at 6,400. We already know that. We've seen them. Now, where are the puts? Where's all my bears? And you want to see some, otherwise we're kind of unbalanced. Okay, we have some 6,200s for Monday, no big deal. This is Monday action, so that doesn't really matter. 6,100 for the end of the month. We got, going on time a little bit, 59.25. Now, we should be a little bit worried that we don't have a lot of puts to decay because we get that Vantage Charm rally, out of the money puts decay. If customers are long, dealers are short, they decay and they decay up. Market makers get to buy back. So we don't mind seeing stuff below us. We get the decay flow if we're bulls. I mean, down here, 5,800, that's way too far away. So we're kind of doing a little bit of a road ahead, folks. So 6,100 into the end of August. So that, think of that as an inflection point. We could accelerate down toward it. If it breaks, before that over here, so this doesn't have to be on that day. This could be, whatever, on the 6th or something. Just kind of in the back of your mind, know that that's there. Okay. You're welcome. I hope my explanations, I know I kind of am not linear in my explanations sometimes. Maybe that's that quantitative thing, but the whole process isn't linear. The whole process is interconnected or multi-time frame. I imagine many of us have learned TA or price action, whatever you want to call it, looking at multiple time frames, looking at, my mentor, Greg, you met him. He looks at 5 time frames, but kind of like the default when you're trading is 4 time frames. 15 minutes daily, 65 minutes and weekly. Keep the weekly down there, a little thumbnail to see where you are in relation to things. The daily and the 15-minute kind of for trading, and the 65 minutes to give you the view for the next few days. And so I think many of us are used to looking at least 2 time frames, and so you kind of have to bring that same way of looking at things into analyzing it here. Well, I was trying to ask if they have a big move when SPX course go further than expected move. Yes, yeah. So if they have a big move in either direction, then SPX absolutely could go more than its expected move, but surprisingly not by much. If it's so anybody have a Google or AI handy? How much percentage weight in the SPX, Tesla, and Google are? I'll ask my local AI. I'll ask Perplexity. I use that for kind of junk questions. What percentage weight in the S&P 500 do Tesla and Google have each and combined? Okay, Perplexity is figuring. So Tesla 1.76% to 1.8%. Oh, between the two Googs is a pretty fair amount. So both Googles have 3.5%, combined about 5%. And so about roughly how many S&P points can we expect them, about how many S&P point move would they likely contribute to? We can kind of do the math about what I say altogether, 5%-ish altogether. So 5% of the S&P. So if it's going to have a 1% move, 5% is going to roughly spill over to 0.05, 0.10, 10, 20 points. So we could say that. That's how I'm going to guesstimate it. Let's see what... So they combined for 248 S&P points. Yeah, no, that's answering the wrong question. Okay, I trust my math. It's gonna be about a 0.02% move, or maybe even 0.2 at most if they totally tank. So it's not going to kill the index. You're welcome. Okay, we got people. Joel, you want to speak? You're on the stage. Oh, no, that's just your thing. Never mind. I thought you were like on the stage. Okay. Selena, do you want to speak? I'll put you on the stage. I know Jerry, I know she was here. She had a question about flies, I think, and iron flies. And we could talk about that briefly. Is Jerry here? Okay. Where'd you go? I had you here a second ago. Where'd you go, Selena? You were right here. Okay, here you are. And there's Jerry. Okay. Go ahead, Selena. You got the mic.
Oh, well, no, sir. I really didn't have anything other than thank you for your time and
Oh,
answering my questions.
oh okay. You're welcome. That's what I do. Seems like I've been that person for years in my life in one form or another. Okay. Jerry, we don't have to because, okay. Well, I don't trade them a lot. So she was asking about iron flies, and actually, was going to have a Zoom call today with somebody who's not involved with a hedge fund exactly, but he's a trader like me. I've been in a trading group with him since 2017, I think. Every Sunday, seven of us, a, I would, couple of us have services or run services. The rest of us, seven traders that have experience that trade a lot are in a Zoom call every Sunday morning from 9 to 10. And so he knows a hedge fund guy that has a small hedge fund that has some kind of secret sauce with strangles, with iron butterflies. So I'll tell you how I was trading them when I traded them. I'll tell you what this person's secret sauce is. I mean, I don't really know. I guess this is from a 2-minute conversation. We're going to have a Zoom call. But the way I was trading them, like the textbook way, all right, we have a 25-point expected move, right? So we're going to sell the at the money. Let's just say sell the call and the put, give ourselves the expected move-ish on top, maybe a little bit more, 25, so maybe something like this. Let's start with something conservative, 25 and 25 on the bottom. You get $17 for that. You sell it and buy back at $16. Another way to do it, I sometimes would do it. So buy back the center that I'm selling for $25 here. See, 15 and 10. Try to buy back the center for $14. Keep the wings, and then recenter. So you buy back the center. So now you're long these wings, and let's say we move down to here. So then you would sell the put and call down here, and you kind of use the wings to resell. That's another way to do it. The way this guy does it, and I want to find out a little bit more. So here we have an expected move of 25. What he does is he'll sell one over here. He'll sell another one at the expected move over here, I think. I know he uses he uses the expected move on the put side, on the call side, top, bottom, in the middle. I'm not sure exactly what he does with that, but I know those are the three pieces he uses in it. So that's that. But I'll get you more iron fly stuff. Like I said, I just like the iron condors. I do really good with them. Butterflies, broken wing flies. So yeah, I'm not the iron fly person that trades them every day, all the time. I'm just not. Anyone else have anything? I've gone a little past 8:30. It's going to be go time soon. It's going to be go time soon. Oh yeah, so a few housekeeping things again. So TradingView. If you had the TradingView indicator that was working, for weeks or months, whatever, that's still going to work. If you got caught in the shuffle kerfluffle when the one that I had published free got taken down because it wasn't unique enough by the whoever, whatever, I got notifications saying, no, we have to take it down because something that draws horizontal lines isn't fancy enough to be like, I guess they don't want to clog up their free indicator space with kind of boilerplate stuff. They want fancy schmancy because it's easier to sell fancy schmancy. Oh, look at these fancy things we have. Come join TradingView. But as an invite only, you could do it. So basically, the indicator that's now an invite only is the same one that was there before or a version of it. You know, I have versions with 1 slot, with 3 slots, with 10 slots, but it's the same thing. You put the string in and it shows up. I got lots of versions, all kinds of stuff. So it'll be a version of this. See how good I type? Reaction levels. There'll be a version of this. And what you do, copy and paste and put it in there. It has room for 5 strings or more, whatever it is, but we're only putting in 1. Now, I have some stuff for Tesla or Q or SPY, but that's not stuff that I came up with individually. That's just stuff from people's gamma calculations. I can throw it in sometimes if I have time. If you want to play with it, you can. Know that it'll roughly be more or less the same as, I can't say exactly, but be more or less the same as if you put in, let's just say, Google. Okay, so we're talking about Google. I don't think I have access to a Google, but let's just say SPY, because I know that I have 10 million people that have these things available that I could grab if I want. It'll be roughly equivalent to this sort of thing in SPY or in QQQ. You might want to see QQQ. I just kind of want to know where the levels are broadly. We don't know exactly what's long or short, but we know where the numbers are. Or NVIDIA, you might want to see where the numbers are. So I have access to some of that stuff, and I'm saying that to say this. That's not officially part of what you get, but I'll try and throw it in when I can. And this one, you have room for more strings if and when that I throw those in. Okay. So, but to do that, I need your TradingView ID. It's invite only. So you send me your TradingView ID, and I just found out mine somehow. I don't even know. I think if I go to my profile, I find out my TradingView ID. I don't even know where the hell it is. It's there somewhere. I only have a bio. I thought I had a bio up. Yeah, I'm not very active on TradingView. My TradingView ID is here somewhere. I know that much. Anyway, I'm not going to bore you with all this stuff. I don't know what happened to you, but somehow I got caught in some weird thing that I don't know what to do with, so I'm just going to get out of there. I just lose where I was. Hope I didn't close. Is there a way to undo any TradingView Mavens here? Oh, wait, I think I was playing with this. Yeah, here's where it was. Okay. So anyway, that's that one housekeeping thing, the TradingView indicator. So if you need the TradingView indicator, it's invite only. Give me your TradingView name. I go in there somewhere and I click invite, and then I suppose you can go fetch it once you put in, you look in Doc McGraw's public scripts or something. If you don't see it, ask me and I'll find the person that's helping me, bad hombre, because this is not my wheelhouse. Okay, any other questions or comments? Discord is easiest, but I'm also monitoring Substack. Can always reach out to me on Twitter. It's always good to, mess around there. That way you get like crowdsourced, comments, or a lifeline, like what was that show? The $64,000 question or whatever it is. I'm going to use a lifeline. I'm going to ask Twitter what they think of the of the Japan elections. I used a lifeline, because there was one guy that wrote this big thing that sounded like it was going to be a big deal. I kind of saw it last week and thought it wasn't going to be a big deal. If you remember, I mentioned it in a note. We had a little bit of macro stuff. We had the Japan 30-year go above 2.5%. We had our bonds go up as well, the 10-year. There are some people that said that wasn't only the Trump Powell firing. Yeah, that was part of it, but really that might have been the headline, but the disruption or the reallocation of the Japanese bond market, the carry trade also contributed to that. But by now, from what I understand from my macro bro contacts, this was already known. There was JPY call buying, EWJ call buying in pretty big size ahead of this. And this doesn't really change like who the main players are, who's in charge. It's kind of like if, I think ish, it's kind of like if the Republicans lost the Senate. Okay, great, but Trump is still the president. They still control the Congress. So things might change a little bit, but it's not going to be a huge change. That's kind of what I think it really is. So it sounds like there was more clickbait or more much ado about nothing. See you all in the morning. Okay, good night. Time to put the goats to bed. Thank you all for attending.